So you're only making the minimum payment on your credit card or loans? Cute. You think you're staying on track, but financially, you're basically donating your hard-earned cash to billionaire bankers. Minimum payments are a trap designed to keep you in debt forever. Let's get smart and stop letting them play you. Today we're exposing why only making the minimum payment is a trap. Spoiler, lenders absolutely love it and it keeps you broke. Let's dive into the drama. Part 1. What is a minimum payment? Oh, just the absolute bare minimum they let you pay to keep them from calling your phone while they quietly drain your bank account with interest. Let's fix that. Paying the bare minimum keeps the wolves off your back, saves your credit score, and avoids late fees. Cute, right? But here's the tea. That minimum is designed to keep the bank rich, not you. Most of it just evaporates into interest, leaving your actual balance basically untouched. Part 2. Credit cards, aka the ultimate trap. Let's talk plastic, because those minimum payments are doing major damage to your vibe. Say you've got a $5K balance at a spicy 24% interest. Your starting minimum is just $100. Sounds totally cute and manageable, right? Wrong, babe. Here's where they absolutely trap you. Honey, that minimum payment is a trap. Most of it just feeds the interest monster while barely touching your balance. Sure, your payment shrinks, but so does your future. You're basically signing up for a decade of debt, turning a cute $5,000 splurge into a tragic multi-thousand-dollar nightmare. Don't do that to yourself. That's why credit card companies love your cute little minimum payments. The longer you carry that balance, the richer they get. Now let's talk personal loans, honey. Unlike credit cards where you play pretend with your budget, these have fixed payments. No choosing a minimum here, you pay exactly what's required, no excuses. Look, if you only pay the bare minimum, you're on the slow boat to Debtville. A 5-year loan stays a 5-year sentence, and a 7-year one is basically a lifetime. Throwing in extra cash shrinks your interest and gets you free faster. Stick to the script, and you're just volunteering to give the bank more of your hard-earned money. Don't be that person. Part 4. Car loans. Shockingly, they work the exact same way. Your monthly payment is mathematically dragged out so you actually pay it off eventually. Sure, stick to the bare minimum and you'll stay on schedule and finally own that ride. But sweetie, there are 2 major catches. First, you are willingly handing over every single cent of that bloated interest. Not cute. First, cars lose value faster than your ex's promises. Early on, that shiny ride depreciates so quick you'll end up upside down, meaning you owe more than that hunk of metal is actually worth. Pay extra on the principal unless you love wasting money. Now let's talk mortgages. Yes, that massive, life-altering debt you'll be flirting with for the next 30 years. Fun, right? Paying your bare minimum monthly mortgage is cute and all, but let's be real, it's basic. Sure, there's no shame in it, but you're getting played by the math. Early on, the bank is gobbling up almost all that cash for interest, leaving your actual balance practically untouched. Don't worry, sis is here to help you get smart. Look, with a basic 30-year mortgage, you're basically burning cash for years before touching the actual loan. Not good. That's why tossing in just 1 extra payment a year is a total power move. It effortlessly shortens your term, slashes that annoying interest, and saves you tens of thousands. Part 6. Why lenders adore your minimum payments. Here's a little secret most people totally miss. Lenders make their money off interest, babe. The longer you borrow, the more they collect. When you only pay the bare minimum, your debt drags on, interest piles up, and they get rich. It's not evil, it's just business. Know the game so you can actually win it. Part 7. When minimum payments are actually okay. Look, paying the bare minimum isn't always a total crime. Sometimes life hits you hard, like a sudden job loss, medical drama, or needing to build an emergency fund. In those chaotic moments, just keeping your accounts active is a win. Just don't get comfortable. It's a temporary survival hack, not a lifestyle choice, babe. Part 8. Escaping the debt pit. Want out faster? Try these cute tricks. First, pay more than the bare minimum. Even an extra $50 keeps the interest monsters at bay. Second, target high interest debt first. It's basic math, babe, and it saves the most cash. Third, buy weekly payments. Paying half every 2 weeks tricks your budget into an extra full payment a year. Stay smart. That's 1 extra payment a year, sweetie. Also, stop adding new debt. Paying off bills while swiping your card is literally just running on a treadmill. Progress happens when balances actually go down. Sure, paying the bare minimum keeps the wolves at bay, but it definitely won't buy you that Portland mansion. Honey, paying just the minimum on your credit cards is a trap designed to keep you broke. It's the absolute floor, not the goalpost. Whether it's plastic or a mortgage, dragging out payments just feeds the banks more interest. Do yourself a favor and pay extra whenever you can. Less stress, more freedom, and way more money left in your wallet for things that actually matter. If this actually managed to penetrate your screen time, smash that like button and subscribe. Share this with that one friend who still thinks making the bare minimum payment is a financial strategy. You're welcome, babe. See you in the next one.